Hey everyone, welcome back to Corporate Decoder, the place where we unpack the complex world of business and finance. And today we're diving into some official documents from Federated Hermes Index Trust, specifically their shareholder reports, which are packed with financial details that tell a pretty interesting story about how their funds are doing. So buckle up because we're going to decode what these numbers really mean for investors. Let's start with the big picture. These folks manage investment funds and they have to tell everyone how those funds are performing, what they cost, and what they own. This particular filing is for the period ending the 31st of October 2025, and it covers several different share classes for their mid-cap index fund and their max-cap index fund. Think of these as different versions of the same investment, each with slightly different fees or features for different types of investors. Now, the part everyone wants to know about: how did these funds actually perform? The reports dig into this by comparing the fund's performance against its benchmark index. For the mid-cap index fund, that benchmark is typically the S&P Mid-Cap 400 index. For the max-cap index fund, it is the S&P 500 index. The reports highlight that these funds aim to track these indexes, but also try to do a little better through what they call enhanced management techniques. This means they're not just blindly buying every stock in the index, but they're making some smart adjustments to try and boost returns or reduce risk. It breaks down what helped and what hurt the fund's performance. For example, in the mid-cap fund, they mention strong stock selection in sectors like consumer discretionary, financials, healthcare, and materials. They also saw a positive impact from investing in companies that recently went public, those IPOs. Some of the top performers that really boosted the returns included companies like Sarepta Therapeutics, Incorporated, Pure Storage Incorporated Class A, Mastec Incorporated, and Acadia Healthcare Company Incorporated. But of course, not everything moves in the right direction. The report also points out the areas that dragged performance down, like stock selection in the consumer staples, information technology, communication services, and industrial sectors. Some names that pulled the returns down were Rivant Sciences Limited, Celsius Holdings Incorporated, Lumentum Holdings Incorporated, and EchoStar Corporation Class A. It is a good reminder that even in index tracking funds, individual stock performance matters because of those management tweaks. Looking at the long haul, the numbers give us a clearer picture. For the Federated Hermes Mid-Cap Index Fund institutional shares, when we look at the average annual returns over 10 years, it shows about 9.97%. That sounds pretty good, right? That means if you had invested a hypothetical $10,000 10 years ago, it would have grown significantly. However, compare that to its benchmark, the S&P 1500 index, which returned a much more impressive 14.24% over the same decade. Even the S&P Mid-Cap 400 index, which is a closer benchmark, slightly outperformed at 10.17%. This tells a story. While the fund did make money, it lagged behind the broader market indexes, suggesting those enhanced management techniques didn't quite keep pace with the overall market growth in the long run. For the Federated Hermes Mid-Cap Index Fund, the total net assets for the fund stood at a substantial $284,900,272. That is a lot of money, showing significant investor trust and participation in this fund. The portfolio turnover rate, which shows how often the fund buys and sells its holdings, was at 31%. This indicates a relatively stable portfolio, not a lot of frantic trading, which often aligns with the strategy of index tracking funds. Now let's get into the nitty-gritty of what these funds actually own. For the mid-cap index fund, the portfolio of investments is quite diverse. They hold common stocks making up about 97.5% of their net assets. Sector-wise, information technology was the largest holding at 14% of net assets. This is followed by financials at 15.5% and industrials at a significant 23.7%. This breakdown shows a heavy concentration in these sectors. Digging deeper into the specific holdings, we see a lot of familiar names across different sectors. In the information technology sector, for example, they had significant positions in companies like Microsoft Incorporated, Apple Incorporated, and Nvidia Incorporated, all of which are major players in the industrial sector, companies like XPO Incorporated. Delta Airlines Incorporated and Caterpillar Incorporated are among their top holdings. This stock selection reflects a strategy of investing in large, established companies within these key sectors, aiming for stability and growth. When we look at the materials sector within the mid-cap index fund, holdings like RPM International Incorporated and Westlake Corporation represent a smaller slice of the pie at 4.8% of net assets. This indicates diversification across various industries, but a more cautious approach to materials compared to technology or industrials. Looking at the financial highlights for the mid-cap index fund institutional shares, shares, we see a total return for the year ended the 31st of October 2025 of 6.19%. This is a decent return in isolation. However, when compared to the S&P Mid-Cap 400 index, which saw a 6.38% return for the same period, it is slightly underperforming. Over 5 years, the institutional shares returned 12.93%, while the Mid-Cap 400 index returned 13.02%. The story repeats over 10 years, where the fund returned 9.97% versus the index's 10.17%. Every little bit of underperformance adds up over time and means investors didn't quite get the full market experience. The net expense ratio for these institutional shares is 0.31%. This means for every $10,000 invested, about $31 goes towards fund expenses. This is relatively low, which is good for investors looking to minimize costs. It is further broken down that the net expense ratios are calculated without reduction for expense offset arrangements. This clarifies that the reported expense ratio is the direct cost before any potential adjustments. Now let's shift focus to the Federated Hermes Max Cap Index Fund, which aims to track the S&P 500 index. This fund's performance section reveals a similar trend of slight underperformance compared to its benchmark. For the year ended the 31st of October 2025, the Class C shares excluding sales load had a total return of 19.79%, while the S&P 500 index saw a much higher 21.45%. This underperformance, even with a strong market year, is something to keep an eye on. It suggests that the fund's strategy, while aiming to track the S&P 500, might be introducing enough friction. Or perhaps the stock selection isn't perfectly aligned to create this drag on returns. The portfolio for the Max Cap Index Fund is heavily weighted towards information technology, representing a massive 34.7% of its net assets. This is a significant concentration. Financials follow at 12.3% and consumer discretionary at 10%. This heavy reliance on the tech sector is a key characteristic of this fund. Within that tech sector dominance, we see gigantic holdings. Apple Incorporated accounts for a staggering amount of the portfolio. Other massive tech holdings include Microsoft Incorporated, Nvidia Incorporated, and Broadcom Incorporated. This concentration in mega cap tech stocks aligns with the S&P 500's composition, but it also means the fund's performance is highly tied to the fortunes of these specific giants. On the flip side, a large holding in Tesla Incorporated, a notable name in the speculative growth category, also stands out. Looking at the statement of assets and liabilities for the Max Cap Index Fund, we see total assets of over $260 million. This fund has a substantial net asset value of $260,127,649. This large asset base allows for significant diversification, although as we've seen, the sector allocation is quite concentrated in tech. For the Max Cap Index Fund Class C shares, the financial highlights show a total return of 19.79% for the year ending the 31st of October 2025, excluding the sales load. While this is a strong number, it still trails the S&P 500's 21.45% return. The net expense ratio for Class C shares is 1.40%, which is considerably higher than the mid-cap fund's institutional shares. This higher cost eats into returns, and when combined with the underperformance against the index, it makes this share class less attractive for cost-conscious investors. Even looking at the 10-year average annual return of 13.10%, it falls shy of the S&P 500's 14.63%. The net assets for the Class C shares are around $35.5 million. Notice how the net expense ratio is 1.40%, which is quite a bit higher than the institutional shares. This is expected for Class C shares because they often come with a deferred sales charge when you sell. Interestingly, both the Max Cap Index Fund and the Mid Cap Index Funds mentioned planned changes to their diversification policies. Effective the 29th of December 2025, they intend to be diversified in approximately the same proportion as the S&P 500 or S&P Mid-Cap 400 index, respectively, when is diversified. This means they will continue to track the index even if their own portfolio becomes non-diversified because of changes in the index's weighting. They also added non-diversification risk as a principal risk of the fund. This is a bit of a contradiction, adding a risk they are trying to mitigate, but it essentially means they will continue to follow the index's diversification even if it results in higher risk. Now, moving past the fund specifics, let's touch on the company's internal governance. The report confirms that Federated Hermes Index Trust has a code of ethics in place for its principal executive and financial officers. Importantly, it states there were no amendments to this code and no waivers were granted during the reporting period. This suggests a stable ethical framework at the top management level. The report also highlights the audit committee members John G. Carson, Thomas M. O'Neill, and John S. Walsh, who are all deemed to be audit committee financial experts and independent. This is crucial for good corporate governance, ensuring that financial oversight is handled by qualified and unbiased individuals. Diving into the fees paid to their independent accountants, PricewaterhouseCoopers LLP, we see audit fees of $66,470 for the fiscal year ended 2025 and $63,914 for 2024. Audit-related fees were zero. Tax fees were also zero for 2025. But there were $18,224 in other fees in 2024 for services related to potential passive foreign investment company holdings. The Audit Committee has clear policies in place for pre-approving all services, ensuring that the auditor's independence is not compromised. These policies outline detailed procedures for approving various types of services to maintain auditor objectivity. Switching back to the financial statements, let's look at the Federated Hermes Mid-Cap Index Fund's overall financial health. The total distributable earnings are around $135 million. This indicates a healthy accumulation of profits over time. When we look at the cost vs total value of investments, the identified cost was $174,417,882, while the net assets were $284,900,272. The substantial difference between cost and current value shows significant unrealized gains, a sign of successful investment over the years. For the Max Cap Index Fund, the net investment income for the year ended the 31st of October 2025 was over $1.5 million. This is solid income generated from the fund's investments. However, the total expenses were higher at $2,349,276, leading to net expenses after waivers and reimbursements of $1,761,177. This means the fund spent more on operations than it earned in net investment income during this period, relying on capital gains to boost overall returns. Finally, the report includes a detailed evaluation and approval of the advisory contract. This section is quite long, but essentially reiterates that the Board of Trustees, including independent trustees, reviewed the investment advisory contract with Federated Equity Management Company of Pennsylvania. They examined performance, fees, services rendered, profitability, and economies of scale. They received reports, considered peer data, and ultimately unanimously approved the continuation of the contract. This is a standard process for registered investment companies, demonstrating due diligence in overseeing the investment manager. So, what is the bottom line here? Federated Hermes is running a complex operation with multiple funds catering to different investor needs. The Mid-Cap Index Fund and the Max-Cap Index Fund, while performing decently in absolute terms, consistently slightly underperform their respective benchmarks over the long term. This could be due to the costs of management, the specific enhanced strategies they employ, or simply the difficulty of consistently beating an index. The Max Cap Fund's heavy concentration in information technology is a notable risk, as is its higher expense ratio for some share classes. However, the company appears to have strong governance with an independent audit committee and a clear code of ethics. They're also proactive about managing expenses through waivers and expense limitations, especially for the institutional and R6 share classes, which have lower expense ratios compared to the C and R shares. The fact that they are reviewing and reapproving their advisory contracts annually with detailed scrutiny is a positive sign for investor oversight. For investors, it is a mixed bag. If you are looking for a fund that perfectly mirrors its index with the lowest possible cost, you might find other options that do a slightly better job of tracking. But if you value the active management efforts to potentially enhance returns, even with a small tracking difference, and appreciate the rigorous governance and expense controls, Federated Hermes funds might still be a suitable choice. The key takeaway is to always compare performance not just against the average, but against the relevant benchmark, and to understand the fee structure for the specific share class you are investing in. Alright, that is our deep dive into Federated Hermes' latest filings. What do you think about these funds' performance and their strategies? Let me know your thoughts in the comments below if this breakdown was helpful. Please give this video a thumbs up and subscribe to Corporate Decoder for more insights straight from the source. And don't forget to join our Discord community linked in the description for more discussions. Thanks for watching, and I'll see you in the next video.